One of his successors at Treasury was Stuart Eizenstat. He joins us now for more on the Fed. Stuart, great to have you with us.
Thank you.
And as you just heard from Congressman Ron Paul, a lot of convincing still among his critics by Bernanke, what he needs to do to overturn their criticism and say that the Fed is doing the right thing. What does he need to start with?
Well, first, he's doing this because he has three audiences to address. First, the Congress, which has wanted to be more intrusive, more audits. This is a way of responding and being open, and this is something he's wanted as even as an academic. Second, he's speaking to his own Board of Governors because they're sharply divided between the hawks and those who feel on inflation, and inflation is under control and growth is crucial. And third, he wants to restore trust in the general public that the Fed is not going to allow inflation to get out of control. So he's got a very difficult multiple audience, multiple message to make. It's very courageous that he's doing this, but it's not that radical. All of his colleagues, for example, the European Central Bank head, the Japanese Central Bank head, out of the Bank of England, have had press conferences for years.
And you wonder why it took us so long.
Yes, the Fed has been a very opaque and mysterious body. It's only 1994 that they released their decisions at all. They've started to release minutes now, almost simultaneously. So this is a progression, but there are risks because it means it could politicize and lose some of the independence of the Fed. I think he's doing the right thing, but there's a risk.
I was going to ask about that because how, you were at Treasury. How does a move like this play within the Treasury Department?
Well, when Larry Summers was secretary and I was deputy, we met faithfully each week with Chairman Greenspan, once at the Treasury, once at the Fed. But those were all without any notes. No comments were made, and there was no pressure ever put on by the Treasury on interest rates. So the risk is that by going public, there'll be a greater political pressure. I think, however, that's much more...
You mean it's going to be less independent?
Less independence. But I think that that is counterbalanced by the fact that he's already testifying before Congress many times anyway. He's adopting the same principles that other central banks have done, and this is a critical inflection point because he has to take control of his own Board of Governors. They're divided between the inflation hawks and those who think that inflation is under control. So this is a way of asserting control. They're going public. The heads of the Dallas and St. Louis and Kansas City, they feel no compunction about holding press conferences.
Did you find in those days when you were meeting with Alan Greenspan that he was as opaque to you as the Fed has been in public? In other words, did they play well with others in the political sandbox behind the scenes in Washington?
Alan Greenspan had a great capacity for opaqueness, and that was actually one of his strengths. But during our private meetings, he would give us insights not into where interest rates were going, but his insights into where the world economy was going and where he thought the U.S. economy was going. And that gave us a sort of fail-safe to see whether our own Treasury projections and our own Council of Economic projections were accurate. So it gave us a better idea of putting our policies on fiscal in sync with what he was doing on the monetary side.
But Stuart, I mean, that raises the issue of, isn't there an argument still to be made for an opaque Fed? I mean, I've not heard really anybody criticize this move by Bernanke, but, it's worked so far, in some ways, to have a less transparent Fed until this financial crisis.
Well, that is the big point. We're at a historical inflection point. The Fed injected an extraordinary amount of liquidity through the so-called QE2 program to keep the economy from going into a depression. The question now is, how do you exit from that? They've got a dual mandate from the Congress. On the one hand, to keep unemployment low, and the second, to keep inflation low. His own Board of Governors is divided on this, so it's very important that he publicly take control of that debate within the Fed, but also assure the public. And it's a very tough balance that he has to reach. But I think, on balance, he's doing the right thing for this, and that we'll look over the years and say, why didn't he do this earlier?
Staying on the economy, Stuart, do you expect Bernanke to say much about the economy or economic recovery, and what should he say?
I think he's going to do three things at his press conference. The first is announce the end of the extraordinary QE2 buying program. Second,
he's going to announce that.
I think
ends in June, not in April.
In June,
not today.
No,
right.
In June. This is going to.
But that's old news.
I think the market's taken that into account. Second, that he's going to hold the existing bonds he has rather than dump them on the market. And third, I think he will give a revised forecast for both growth and inflation for the balance of the year, which will probably be slightly lower than their January forecast, probably in the lower range of the 3 to 3.5%, 4%. And he will indicate
that's for growth. What about for inflation?
I think inflation, he'll indicate that there's a slight uptick, but that inflation is still within the 2% range, which is their sort of target goal.
And he'll continue with the idea that the inflation pressures we're seeing right now are temporary.
Are temporary, and that he expects in 2012 and 2013, when you get this big oil shock out of the system, that inflation will recede. And this is very important in terms of going public, because for the average person, they say, well, what do you mean inflation's under control? My food prices are going through the roof, my gasoline prices, $4 a gallon. So he's got a tremendous opportunity here to explain what core inflation means and why he believes that it will remain restrained, and to reassure the public that while he at the one point wants to keep growth going, he's not going to let inflation get out of control, because otherwise it can become a self-fulfilling prophecy. People think, well, this is going to seep into other prices.
Right, because, definitely, I mean, when you go to the gas pump these days, you see that inflation. So how does he, in plain speak, get that across to the American public?
I think what he says is that we know what it means when you have $4 gasoline. We know what it means when you have to buy a box of cereal and it costs twice as much.
We drive, we eat.
Yes, we travel and we eat. But what we at the Fed look at, and it's a great educational opportunity, is wages and salaries. How does this translate into broader? And we have no evidence that that's going to occur, but he will say, I want to assure you that we keep our eye on the inflation ball and we will not let it get out of control.
Okay. Stuart, thank you very much. Really appreciate you stopping by here in the Bureau. Great insight. That was Stuart Eizenstat, the former Deputy Treasury Secretary.